To put it simple, let's say the 99% people right now are severely underestimating the role of AI in society. This is difficult to express in words, but any operational, repetitive type of work is and will be replaced by AI. Yes, of course, involvement. Yes, trying out many things. Yes, skeptical in the beginning. And no, the output is not always as you want, but like especially the last 6 months.
Yeah.
We're entering this era where it's undeniable, getting so good.
Before we begin, let's make something clear. All views expressed in this podcast by me or my guest are purely our personal opinions. Nothing we say should be treated as a recommendation or an inducement to make any specific investment or to follow any particular strategy. This podcast is for informational and educational purposes only. It does not constitute financial, investment, legal, or tax advice. Before making financial decisions, you should do your own research and consult with a qualified professional advisor. Welcome back to a new episode of the Digital Credit Frontier. Today, a special episode because we have Jos Lazet as our guest. He's the CEO and founder of Blockrise. And normally I say welcome to our guest, but now I have to say thank you for having me.
Of course, my pleasure.
All right. So Jos, really looking forward to this conversation. Let's start with the elephant in the room. What's going on with Bitcoin and the price action?
Yeah, I mean, I was quite bullish in the beginning of this year. Last year was like interesting, more horizontal movement. I've been proven wrong this year. Fortunately, no liquidations happened in our platform. But yeah, no, I think I'm still bullish, I would say, for the rest of 2026. But definitely some harsh corrections that happened. Quite some liquidations going on in the market. So never a dull moment with Bitcoin, you know?
Yeah, for sure. You are working in the sector. Do you have insights? Because people are talking about what happened at Binance on October 10th. That maybe, we had that crypto liquidation event. Yes. Some people are pointing towards maybe some market makers went belly up, or they are refusing to put the same amounts of capital back into the markets because maybe they got liquidated. Do you hear something about that?
I read the same mixed signals. I would say X is a good platform to get these kind of insights. And even I think yesterday or the day before, the OKX CEO made some direct statements towards Binance being involved in this. I mean, I think there's always like this macroeconomic movements going on, you know. So of course, precious metals, which is a good topic for today as well, has gone through significant performances over the last couple of months, but also harsh correction over the last few days. And this always correlates to Bitcoin as well. So I think there's always this macroeconomic influence on Bitcoin. It's a bit of a guessing game. I mean, I can imagine that 10 October resulted in some exchanges having to loan money, and that either like with these market, they have to liquidate the loans, or so liquidity problems, I think, is a feasible explanation. But it's hard to say. And it's always hard to say. And, you know, as a Bitcoiner, I'm always like, when in doubt, zoom out. We're still 100% up compared to 2 years ago. We still follow the CAGR of, 35% over the last 5 years. So it's all good, you know, keep on stacking and just like keep the optimism up for the next period.
Yeah. So Blockrise has also assets under management. How are they positioned now? And can you tell us something about the performance that you guys did on 2025?
Sure. So maybe to explain a little bit about asset management, because usually asset management is really seen from a sort of traditional, let's say, fund perspective. Asset management with Blockrise is really from a Bitcoin perspective. So in general, all clients at Blockrise, they maintain their own wallets on chain.
Mm-hmm.
So that means for a custody wallet, it's a segregated wallet. For asset management, it's also a separate wallet. But our asset management wallets are 1 out of 2 multi-sig. So the client has a key to withdraw funds anytime, and Blockrise has a key to execute rebalances. So we project one strategy currently in our platform. The strategy is called Fundamentals. It's a Bitcoin Euro strategy. and all our clients are treated the same way, like from a strategy perspective, but segregated over their own wallets, and they can withdraw funds whenever they want. So this is the whole Blockrise proposition. That said, the Bitcoin Euro strategy is, of course, what you're referring to. The idea is that we manage exposure to Bitcoin. So this is usually for clients who are new to the Bitcoin space and they want to have exposure, but they want to have it managed. They want to have monthly action. So of course, the market moves throughout the month. So there's a rebalance possibility to basically rebalance back to a certain position, but we also change the position. So there's two factors changing the allocation of the clients. That said, Bitcoin Euro strategy in the bull market, the idea is that you build up a Euro position. So you basically take profits over the course of a bull run.
Yeah.
And then in a bear market, of course, you use this Euro position to buy back Bitcoin. Mm-hmm. That's the whole strategy approach. Quite simple, I would say, but pretty cool that it all happens on chain, of course. And with still, I think the core values of Bitcoin that you can withdraw whenever you want. And you can actually withdraw all the Bitcoin directly to your custody wallet. So it's very natively designed.
So to summarize, so a client doesn't have to call Blockrise to ask if they can withdraw the Bitcoin. They
have
always
their own
can.
key. So it's very native. So I would say the only non-native thing as of today is the pricing model, which is still a bit on the traditional side. So there's a custody fee, a management fee, and a performance fee. But don't worry, we're working on this. It's just that it's quite complex to find the balance between attracting traditional investors, convincing them to buy Bitcoin through this product, which is basically like the course of getting them into Bitcoin. Because also we see clients after they've been in asset management, they go to custody, which is part of their journey. Let's put it that way.
Yeah.
And they might even use Bitcoin-backed loans after, which is like the whole risk journey of Bitcoin, which is pretty cool. And this is really what the product's meant for. Pricing will change, and actually we're introducing more strategies later on this year with Bitcoin-backed loans. This is now possible because with Bitcoin and Euro, there's limited options. Going back to the strategy, the idea is to basically retain the same performance as Bitcoin with reduced volatility. So this is really the core principle. So do not expect large outperformances, rather similar performances with less volatility to put clients more at ease. At the peak, so I think by heart it's like 6 October, we were around 15% by heart Euro position and 85% Bitcoin.
50 or 15?
15, sorry, 15.
Okay.
Yeah. And so, this is, so maybe the model.
Yeah.
Quite important.
Yeah.
The model is used as a quantitative model, so it's no technical analysis, no drawing graphs, lines, etc. It's a difficulty regression model. It's quite, I would say, popular model. It basically emulates the difficulty market cap. It's quite a public model. You can easily find it if you look for a difficulty regression model. It's a regression model, so a logarithmic model. Yeah. And basically, what it tries to
so the higher the hash rate.
The difficulty, which is derived from the hash rate, of course, in the difficulty adjustments. So it's also on 2-week basis that the model sort of adjusts. Yeah. But it's quite a steady model, and so we plot this and we compare this to the actual market cap or the Bitcoin price, because if you divide by the amount of Bitcoin, of course, you get the price. And this is what we compare. So we look at the premium of the Bitcoin price, the market price, versus let's say this mining price that we kind of call it.
The cost price of Bitcoin.
Sort of. And it's don't expect it to be super accurate because Bitcoin mining is different cost all over the world. Yeah. And there's many factors, but it's an approach. And it sort of indicates the premium versus the discount on the market, sort of. And it's quite a neutral model. But this is the model that we actually use for asset management and also for other things like Bitcoin Treasury that we are using. So and also, for example, with Bitcoin-backed loans, but let's dive into that later on. So this is the model, again, mid-Bitcoin native, very subtle, I would say. We went from a 15% allocation back to 7.5%. So we used, in the downturn of the market, we used the Euro positions to rebalance accordingly. And of course, Bitcoin became less valuable as well. So the rebalance is more powerful over time. This means that we outperformed or less underperformed Bitcoin in a certain way with like in absolute numbers, I think it's 3 or 4%. So relatively about 10, 15%. So we still underperform. I mean, obviously in Euro, because Bitcoin goes down, it's not that we can have a neutral performance, but it has less volatility. It's less down than Bitcoin is.
Yeah, so the Sharpe ratio is better.
Exactly.
Because, yeah.
That's the whole principle of asset management.
Yeah. All right. I think that's a great approach. Yeah.
Yeah, and again, like it still gives you all the freedom to it still remains your bit. You know, the core values of Bitcoin still adhere, and you can move out whenever you want.
Yeah.
And now it's a time to sort of dynamically change this model into a more Bitcoin native. So like I challenge my team to come up with a proposition. So not a new model, but a proposition of our asset management to make it difficult for people to choose between custody and asset management. You know, other than of course the 1 out of 2 multi-sig versus custody, which is 1 out of 1, which is of course a trust factor to Blockrise. But from a sort of product, like a selling perspective, this is an ideal approach. I think that it from a cost perspective, it becomes difficult to choose between our asset management proposition and our custody proposition. And that is quite an interesting challenge.
Yeah, that's awesome. Because if you can show that basically with the asset management, if you, even though Bitcoin can go down, but if you outperform Bitcoin, and if those costs weigh up to the fees, then maybe you're better off using the asset management than custody, because then you don't outperform and you still have a little fee. But if you manage with basically, that's also the whole promise of asset management, to have a better performance than the fee. And if you also outperform Bitcoin, that would be the ideal
exactly. And
product.
And the thing is that we all know that the volatility of Bitcoin is decreasing exponentially over time. So at some point in future, this model that we're currently using, a Bitcoin Euro model, will become less valuable. As you know, this model is mostly valuable with volatility. If there's, let's say, in a non-volatility market in the far future, maybe, I don't think so, but let's say in the far future, this model doesn't add any value anymore, because the only add-on of value is volatility, because this is when we can actually sell Bitcoin to buy
make
back.
a difference.
Exactly.
Yeah.
And actually, like, it's quite a challenge to make a sort of Bitcoin asset management product, because in the end, Blockrise, we are super long on Bitcoin. So we are aware that we want to maintain this Bitcoin position. So the model, for example, it goes between 0 and 40% Bitcoin allocation. It will, so 0 and 6% euros, which is quite hefty, I would say. The fact that there's a potential, peak market 60% euro allocation in your portfolio, which is for a Bitcoin native firm is quite exciting, knowing that inflation and everything adds on to it. But it's never 100%. And this is what we see with competitors or other players in the market, is they really have this moment where they use a sort of handbrake or a total sale.
Binary, more and more binary, that you all get out of the position or in.
And we really don't believe in that. So even, let's say that we are absolutely wrong, the model describes it's a sort of super cycle moment, that the premium of Bitcoin versus our market, our mining price is really off, then still we would retain in this 6% euro proposition, which is, I would say, relatively bad. But the 40% Bitcoin allocation will remain. And as let's say we keep getting into new all-time highs, more than the model prescribes, we will still retain this 40% allocation, which is relatively decent compared to, I think, many of the other players in the market. So it's interesting. I think it's much underappreciated. So on the Blockrise end, we have a lot to win to explain more about this model, because it's pretty cool. But we just need to make it a little bit more Bitcoin native. And then we're going to add on some more risk-taking portfolios with Bitcoin-backed loans. And then it becomes very interesting.
Yeah.
So cool. It's cool stuff.
Nice. So you already mentioned precious metals. Can you tell us something about what's happening with gold, or did you have anecdotal evidence of clients that have been allocated to gold and maybe moved out, or are selling? Are there clients that selling Bitcoin to buy gold because they have the feeling that they missed out and maybe are allocated to the wrong assets?
I would say, so in general, what I see from my clients, so my clients I've known for up to 10 years, so I was 19, and I think it's quite crucial in my development of Blockrise, personal development, investment thesis, that they taught, like, I was just a Bitcoin guy. Like, this is literally, for most people, I was just the Bitcoin guy. And they taught me a lot about real estate and precious metals and alternative investments, I would say. So yes, my clients are definitely allocating or have allocated a lot to precious metals, gold, silver, I would say is the far majority of course. So yes, I'm quite in the loop from a macro perspective. And of course, my own investments as well. Gold, silver, crazy performances over the last year. A client told me a couple days ago that he's more comfortable with taking a Bitcoin backed loan now that he has such a high performance on his gold position.
All right.
So this is quite interesting,
Yeah.
because it kind of changed the game where, you know, like, because of gold, he's able to allow more risk in his Bitcoin portfolio. So that's one interesting case, I would say. Another interesting case is we're talking with a Dutch renowned asset manager. We all know him. We'll see when this becomes public, but he is considering a gold Bitcoin proposition where gold is hard to leverage. But, you know, like, if you have two assets that are quite correlated, you need to have some sort of lever to outperform, because just to rebalance is quite difficult. But leveraging Bitcoin is possible, while leveraging gold is not. Is very difficult, especially
Why?
if you have physical gold.
Yeah, all right. Yeah. Okay.
Yeah. So paper gold is a different story.
Yeah,
But if
yeah.
so with us, of course, you actually hold your own Bitcoin. And his investment thesis is that you should always have access or actually own the investments that you have. So paper gold or paper Bitcoin is not an option. Leveraging actual physical gold is difficult, if not impossible, for now. Happy to chat with the people that want to talk about it, because I have some ideas, but another story. So Bitcoin is. And so this is quite a development, I would say, on the precious metals side or the space, is that there's often gold bugs that become Bitcoiners. Like, this market is quite overlapping. Of course, there's a part of the gold bugs that are really against Bitcoin, which I understand.
Peter Schiff,
for example, and there's many other people out there that think similar, but there's also, I think, a large group that actually have both, just like me and many of the clients.
Yeah.
But yeah, I mean, from a maybe market perspective, it's sort of disappointing that Bitcoin is underperforming gold. On the other hand, we've seen this harsh correction over the last few days. I think 30% drop on silver.
Yeah.
Of course, it was an insane rally previously, but a 30% correction is insane in such a short time. I mean, Bitcoin doesn't have this in such a short time in this area right now. So yeah, there's quite some rebalancing going on. People are also taking profits with their gold position, and we see this. We literally see sales
Inflows.
statements. Yeah, well, I think that inflow-wise, we're doing great.
Okay.
Like, we've done plus 36% inflow last month over our entire asset management, which is great.
Yeah, that's a lot.
And considering the Dutch market, for example, I think it's great.
Yeah.
It's really great. But we also see sales statements of gold as a proof of funds for buying Bitcoin.
So that's basically what I wanted to ask. Like, that's really the real capital rotation from gold to Bitcoin.
Yeah, I would say the capital rotation really seems like reallocating the entire portfolios, maybe. But I think it's more like a rebalance.
Yeah,
you know,
sure.
It's take some performances here to reinvest there, but they're still long on Bitcoin and gold.
Yeah, that's a debasement trade.
Yeah.
And you can choose different kind of assets. Yeah.
So, and then I would say, maybe to end with the precious metals, the silver gold ratio is quite interesting as well. Like, silver outperformed gold relatively a lot over the last, let's say, 12 months. And yeah, well, this correction was predictable, I think, but I'm really curious to see what's going to happen for the rest of 2026. How far can it go? If you look historically, the silver run-ups are never super long-lasting. But I also think that we can all agree that historical events, especially in today's market, cannot be taken for granted anymore. Like, the 4-year cycle of Bitcoin is not the same anymore either. So perhaps the same holds for precious metals. Very curious to see what's going to happen.
Yeah. You know, I think this is a great segue into the next topic, because I want to ask you about AI, but I was listening to another podcast, and they were also talking about silver and the amount of silver it's needed within the military, within all different kind of sectors. And there, Willem Middelkoop, he tweeted out that like we cannot find new silver mines. So alluding to basically the supply squeeze. But yeah, I'm very curious to see what happens next either. But talking about AI, what do you think personally, or maybe from Blockrise? Is it just a hype, or is there real productivity gains? And second question or follow up question is: are you using AI? I think I saw some tweets. And are you already implementing AI into Blockrise processes?
To put it simple, I think that the far majority of the people, let's say the 99% people right now, are severely underestimating the role of AI in society. And this is difficult to express in words, but any operational, repetitive type of work is and will be replaced by AI. Like this is it. I like so yes, of course, involvement. Yes, trying out many things. Yes, skeptical in the beginning, and no, the output is not always as you want. But we're like, especially last 6 months,
Yeah.
we're entering this era where it's undeniable, getting so good. And I think one of the important things to grasp is there's a difference between the AI models being used, which is, like models you can compare easily with performance and benchmarks. However, they're quite close to each other, I would say. So OpenAI with the cloud, with Gemini, like the benchmarks are pretty close. However, the application layer, so the application you use to interact with, it can be a command line, it can be a graphical interface. That's currently where the biggest difference is made. So, for example, Claude really won with their command line integration. And this is where they got a lot of traction. Yesterday, OpenAI released the Codex macOS tool, which is it's a big release, and I think they pushed it because today it is expected that Claude releases Sonnet 5, so a new generation model of I would say so Claude has three models, Haiku, Sonnet, and Opus. Opus is high performance thinking. Sonnet is more like the general, and Haiku is the light model. Sonnet 5 is speculative, of course, but is supposed to be better than Opus 4.5 at a much cheaper rate with a bigger context window. So
and cheaper means less usage of tokens, right?
Yeah. Correct. And also the charge per tokens will also be less than the Opus models. So anyway, to come back, the application layer today, so the interface that you use to talk with a certain model, that's where most of the differentiation is, as far as I understand. There's also, for example, applications like OpenCode, where you can talk with multiple models, and you can really tell that there's instructions like your preferences that already really change the way you prompt. So the way that you talk to an AI, like your prompting, is actually not directly what is put into the model. The application changes this based on your personal preferences and the configuration of the application to provide the right input to the model to get the correct output. And this is currently where the biggest differentiation is. But in the next 2 months, I think that this is going to be flipped around again, and the more context and the better to understand what you want to achieve, and so I'm also really like with the team. So it's a team effort, of course, at Blockrise. We're continuously improving our personal instructions in order to get the output better and closer to what you want. And we're really telling them is that you continuously need to improve your own personal instructions, that if it makes a mistake, tell it to not do it again.
Yeah.
And continuous improvement is shown with AI is groundbreaking. So to come back to your questions, I mean, I think it's obvious now that yes, we're taking this approach. So I would say even from a Blockrise perspective, we're switching to a AI first approach. This means that our funding, like our financial roadmap changes, our HR roadmap changes, the operational tasks within Blockrise. I mean, we're a regulated firm. Everything is changing. We need to be compliant, which is quite a challenge. We need to discover a lot. We want to like be independent of the vendor. So we want to be able to switch between Gemini or ChatGPT or whatever. So there's quite some implementations, quite some investments, but it's a no-brainer. And I'm also talking with other firms or competitors to see what they're up to. They're definitely not up to it. So it's a sort of management decision that I think you need to take. Is like, okay, guys, there's no going back. We need to invest in this. Some people on X are talking about hiring a head of AI or AI implementation specialist to really turn around every process in your company. And I think that it's a little early still, because now you still need to figure out a lot, but it's such a game changer. I mean, every simple repetitive process in your company can be replaced by AI today. And it's not that difficult.
No.
And you really need to be strict, you need to be compliant, you need to check output, but it's developing at such an insane rate that, like I'm talking with software engineers here. So maybe the journey that we went through with Blockrise is, I think it's almost a year ago, I made a sort of statement in the team leads group of the company to say like, hey guys, look at this. This was lovable. I think that product team really needs to start using this like as a main tool, not as a side tool, but as a main tool, because it can explain better what users want to our engineers. So there's less friction, there's less documentation because they can see, they can play around, and product managers can in a natural language way modify our code base. So this was very early on, because today it would look different, but and visually explain and click through it and have everything there to explain it to engineers so they can build it correctly the same way. Less friction, to a moment where we said, okay, all the tech leads, so all the engineering tech leads, they can use Claude. To all engineers are using Claude. And more recently, the entire organization is running on Claude. So this is, and this is from a compliance, a legal perspective. This is from HR, like any possible way. And again, it doesn't replace yet.
No,
because
it's a tool. It's a tool to improve yourself.
But it's developing at such a crazy rate that it's a no-brainer to me. Yeah. And maybe to bridge it to Bitcoin, it's quite concerning, I think, on a macroeconomic level that, like, I think if you ask me maybe a year or two ago, I would say we need to look at China, we need to look at India, what they're doing. And I can see some sort of, for example, let's say legal, I'm paying legal experts here in the Netherlands a lot of money, but I can foresee a future where I would hire a legal firm that specializes in Dutch law in India.
Yeah.
And, arbitrage the cost there.
The labor cost.
Cost, exactly. And this was maybe, I think I made these statements about 2 years ago. Today, this is another game. Like, AI can do a lot. And, this arbitrage will be completely different, but also the other way around. That, like, there's a lot of, I would say, like more like third country, like more underdeveloped countries, let's say, that are going through rapid development with telephones, with internet connections. But with internet and telephone, you also have now access to knowledge through AI. I mean, look at what OpenAI is doing. So this is going to change development. This is going to change labor markets. This is going to change. I mean, I think that we're going to see a lot of new entrepreneurs, like at an exponential rate, because all the knowledge that I had to gain at an early age through, bit of internet, a lot of research, a lot of experience, and now is consolidated in a single app.
Yeah.
And
and it's available for almost everybody with a phone and with the internet
exactly.
connection.
Yeah. And this is, like, we were just talking a little bit about the marketing strategies. I mean, SEO, search engine optimization, is not what it used to be. I mean, you need to optimize to be found through AI models, and everything is changing.
Yeah.
Design is changing, like content is changing. This is why I really like podcasts as well, because video content is, it's coming. Like it will be possible to generate a character and do a full podcast like this in relatively short time. But I think we still have some time left, some months left,
All right.
and there's still some things that are hard to mimic. But like text content, even like newspapers and news outlets are full on writing content with AI. So the like to keep it authentic is getting more difficult and more difficult.
Yeah.
Even this famous TikToker, I think it was news a couple of days ago that he sold his face to an AI company in Hong Kong
Oh,
for
really?
€1 billion, and they're expecting €4 billion in revenue
Revenues.
by this famous guy that does with the explainer videos with his hands.
Yeah.
He sold his identity to a Hong Kong firm. I think it's called Rich Sparkle that bought it. But anyway, this is what we're gonna, and this is just one thing. This
Yeah.
is gonna explode all over. So maybe again to bridge it to Bitcoin, I think we need to have an asset that is not prone to the labor market. Because if you think of fiat currencies, the labor market, they're very closely correlated. It's quite concerning. I mean,
Yeah.
if the labor market is going to implode, without being too pessimistic, but fiat currencies are going to have a tough time as well.
Yeah, and the fiat currencies, they're gonna have a tough time because of the monetary policy. They are interconnected. So that's what the labor market connects with the fiat currency, because basically the Federal Reserve or the central bank, those have a mandate to and keep prices stable and to keep the labor market. That's their dual mandate, to keep the labor market healthy.
Exactly. And also with the sort of AI evolution, you can maybe call it, that we're going through, the fact that we are able to travel very easily across the world connects the world a lot more than, let's say, a century ago, obviously.
Yeah.
Whereas there's no real global currency. I mean, the dollar is losing a lot of traction. There's a lot of countries reducing their exposure to dollar or to the United States in general, which also questions what is next. And I wouldn't say Bitcoin today is capable to replace the dollar or become the global currency that we want it to be
Yet.
Exactly. And so we, Bitcoin companies, need to fight for making it ready, because I would say, as a realistic approach, we are not there yet. I mean, Lightning is great, Liquid is great, but we have a lot of developments to make still. So from a Blockrise perspective as well, is that my harsh opinion on most crypto companies in a broader sense is that 95% is focused on making it tradable. Exchanges. This is where the money is made. And they have actually nothing to do with crypto or Bitcoin. They have a trading engine that is running completely on their own ledger on a database. And once in a while, they have to process some deposits and withdrawals. But it has nothing to do with making Bitcoin better, in my opinion. The majority of the exchanges don't even support taproot addresses, And this is where I think we Bitcoin companies need to take responsibility and actually build financial instruments to build proper implementations. Maybe have you heard of silent payments, for example?
No.
Silent payments is this is what we need to work on. Silent payments, super cool. It's a BIP proposal. It's live. It's working. It's basically a static Bitcoin address that on chain. So it's like you can share everyone your static silent payment address, but once you make a transaction to it, it derives into a unique address. So it's sort of privacy resistant. So let's say you have a donation address, you can show one QR code with your silent payment address, but you make a taproot on-chain transaction, which always derives into a unique address.
But that's almost like an extended pub key that you can, because
but that's not privacy resilient, because a extended public key, so that is
then you can figure out derivation. Yeah.
So you need to be very careful with an extended public key, because with the same wallet, anyone in the future can see your transactions. And with silent payments is a similar solution, but then it's privacy resilient. This is just one example of I think this is sort of groundbreaking Bitcoin development that every exchange should support. We've taken steps to support it, but the problem is, because exchanges don't support it, the majority of the wallets don't support it, it doesn't make sense for us to support it because no one can use it.
Yeah.
And this is, I want to see how we can sort of turn the tables here and encourage, for example, Exchange to support this, because this is really good for Bitcoin development. This is just one step. But Taproot, TapScript, there's so many cool things happening on Bitcoin that make Bitcoin the sound and programmable money that we've been promised.
Yeah.
But we need to put effort. We need to...
What does need to change to get there?
So I mean, I think more of a general mindset is that Bitcoin is here for long term, that we don't want to just make money on the back of our clients, which is what like some crypto players maybe are doing.
Michael Saylor would say that's a myopic framing.
Yeah,
because you're not earning money on the back of you're providing a service that they want to use, right?
Yeah, but for example, I mean, crypto exchanges, don't get me wrong, they're key and they have been key, and they found ways to make it super simple and it's good for adoption, and so there's many great things. But in the end, they take fees on both sides of the order book, and that's where they make money, and they have very limited risk unless they leverage and etc. But they have relatively limited risk, and they always make money on the back of the customers. So again, important, but not helping crypto adoption, I think. So there's a couple things. I mean, I think we Bitcoiners need to collaborate more. And I think this is a unique proposition that Bitcoin has, is that we're so early in this market that we have the potential to collaborate together and to make security better, to make programmable money better. And I think that I do this, like I talk with a lot of people in the space and quite openly, I would hope that we can make it better, even though we might be direct competitors. I think we're so early that there's enough room, there's enough to win, that we can make Bitcoin better. So that's more on the business side. And yeah, I mean, start a company. I know with MiCAR and regulation, it's not easy to start a Bitcoin company today, but come have a chat. Maybe we can provide you the MiCAR framework, but you can do your Bitcoin stuff, those kind of things. And on the other hand, I think that Bitcoin as a network, think Bitcoin Core or whatever, we need more people there. So there's great initiatives. Actually, the founders the people behind Silent Payments also started a company called 2140. Of course, pointing at
the last year of the halving, right?
Yeah, exactly.
Or the block subsidy.
Yeah, exactly. So they founded a NGO, a non-profit organization here in Amsterdam, where they incubate Bitcoin developers. So it's a non-profit. It's sponsored by Bitcoiners, I would say. And they do great stuff. And this is very much needed because they're taking, let's say, more traditional or maybe even crypto engineers, and they incubate them to become a Bitcoin developer. And this is very much what we need. So please go out there, support these guys, because we need it. We Bitcoiners need it. We need, other than the business applications, we need to improve the network. And there's so much to do. Like, I think that with not Lightning, there's countless of things we need to improve.
So you were talking about security. I think that's a great segue into the topic the quantum threat. How are you thinking about the quantum threat? Like one day there may be quantum computers and the current Bitcoin addresses are not quantum resistant yet. Do you think this is a real threat? Do you have like a timeline for yourself? And like, what is Blockrise? Is Blockrise some like preparing for this? Maybe you can talk about that.
Yeah, so I think a couple points. Like there's differences to make. So I think there's a lot of misconceptions in the market about the quantum threat where, for example, as far as I know, so I'm not a specialist at all, but as far as I know, the mining algorithm is fine.
Yeah.
It's not prone to quantum threat. It's mostly the legacy addresses where there's a direct relation between the public key and the private key. And well, yeah, I don't want to get political. I think there's multiple approaches to make in order to become more resistant to quantum computers. For example, there's like proposals to delay transactions with legacy addresses, etc. Again, without getting political, I'm not sure, I'm not harshly opinioned on what is the best solution today, but it's more clear to me that we need to invest. We need to invest in quantum research, in quantum developers. There's currently no good alternative, let's say, cryptography to replace whatever we're having. So I would say those are all valid points, like really considerations to make. However, I do think when you talk about timeline, that we're talking about 5 to 10 years.
Even with AI, you just told how quick the developments are changing. Maybe AI can figure out a way to improve quantum computers.
Sure, I don't personally, with limited knowledge, think so, because I see AI in its current form a lot more. It's models that are trained on historical data, and that's where they perform very well.
Not in creativity, not in like
Innovation.
inventing new things.
Exactly. I don't like, because once we've reached that's called AGI.
Yeah.
Then we can have a sit down again, and
Okay.
I might change there. I think that is also a matter of time. But yeah, I would say 5 to 10 years. What is the direct threat? Let's say there's quantum computers today. Sure, there's a couple million Bitcoin exposed, assuming that everything is like, because you also need to have quantum computers in bad hands.
Yeah.
Not in a research
sure.
institute.
Yeah.
And, there's quite some complications practically seen once you want to do this, but let's assume that's all there. Then my opinion is that it's also kind of good to have this over with. That yes, the financial impact will be enormous. Like, can you imagine millions Bitcoin flowing free in the market?
But it's also a shield, because they will get first to those Bitcoin before other maybe clients' addresses. Is that what you're alluding to?
Yeah,
Is it
well,
like
I mean,
a shield.
Well, so as far as I know, the, let's say, native SegWit address Bitcoins are not prone unless they're spent.
Yeah.
So there's a lot of Bitcoin that are not prone to
Yeah.
the quantum threat. Plus, it's just like, so if you're reusing Bitcoin addresses, it's a bad practice. This is from day one that I got introduced to Bitcoin, is already a bad practice.
Yeah, but some exchanges are
Exactly. So this comes back to the point I previously made, is that they're just depositing withdrawal and they're not using proper standards.
They force clients to use the same address.
Yeah. So maybe a small sidestep here is: do you know how much fun it is as a Bitcoin company to have an exchange whitelist 10,000 Bitcoin addresses? Because I would love to whitelist a extended public key and have them do the derivations, but this is not feasible. So we force them to whitelist a lot of addresses, because every trade through Blockrise that we do through an exchange is done over new deposit address. We don't reuse addresses. So,
Nice.
But it's also a flaw, because exchanges really struggle with it. And there's exchanges that support maybe 100 addresses. So we have a remote desktop protocol isolated in a security environment that clicks through the whitelisting procedure and removes used addresses to add new addresses. This is really like the things that we had to build to make this work. But anyway, yeah, so assuming, and this is a practice, once it becomes a real threat, I think every exchange will fix this, and they can fix this in a week or two.
Yeah.
So this is not, I think, the highest concern. I think the biggest concern is, of course, older spent addresses that are prone, legacy addresses that are prone, and yeah, at some point we need to fix this. So yeah, I mean, we need to invest, we need to research, we need to find developers and even scientists that are willing to work on this. We need to fund this.
But no panic.
No immediate panic. I mean, a hard fork is not ideal. I'm very much aware of this, but in the end, I also believe that in the greater sort of spirit, that once there is a dire need to fix something, we'll fix it.
Yeah.
And sure, a hard fork might happen at some point in the far future, and that might mean that there will be a split, which has been like pretty bad in history. Look at the 2015-16 period with Ethereum and Ethereum Classic. But I mean, the longest chain will survive. We've seen this also with all the forks of Bitcoin that didn't succeed. And yeah, I mean, I think the interest of fixing Bitcoin and having Bitcoin play a crucial role in the global economy is going to be so big that we'll fix this.
Yeah. So The tagline of this podcast is building the future finance on Bitcoin. And let's dive into the Bitcoin-backed loans. That it's a service that you now provide. Who is eligible for this service? What does it include? Please tell me how you guys are building the future finance on Bitcoin.
Yeah, of course. So Bitcoin-backed loans is really cool. So we spoke about asset management earlier, but it's all this, this Bitcoin versus fiat type of approach, always the spot. And of course, there's derivative trading, which you can consider as a sort of another dimension, but this is done only on exchanges. And this has nothing to do with Bitcoin, I think, directly. Like it's all happening on order book level. Bitcoin-backed loans is actually leveraging on-chain Bitcoin to get a loan against it. And that's a sort of new dimension that opens up, and it opens up this whole future of building very cool things on Bitcoin. So just to open with, Bitcoin-backed loans is our first offering, but there will be so many things based on that. And I'm super excited to work on that. Currently only eligible for business clients, which has to do with regulation. I mean, we're a MiCAR licensed firm. It's good to also note that Bitcoin-backed loans are not regulated under MiCAR. So MiCAR specifies 10 services, which are 5 are trading related, like operating a trading platform, etc. And then there's custody, asset management, advice, and placement of assets. So those are the 10 services. But for example, mining or payments or lending or loans are not regulated under MiCAR. So we had to isolate this and set this up and talk with the regulator on how to do this. I think that, of course, in the near future, and it can be months to years, this will be a regulated service as well, which will be good for Bitcoin. Because of that, and because of the consumer credit laws, that means that Bitcoin-backed loans can only be offered to corporations until we find a way which can be regulated through consumer credit license or through exemptions to also offer it to consumer credit. This is top prio because Bitcoin is a very much consumer-owned asset. Institutions are making their way, but the far majority of the institutions is through centralized manners like ETFs. So let's say it's quite limited to offer Bitcoin-backed loans to corporations. And it's like people that have Bitcoin on the balance sheet already, or they've been acquiring a position, or miners, but it's quite limited. Bitcoin-backed loans to consumers is a big market. We've seen this with Ledin. If you look at their outstanding loans, Tether, we're talking about billions in outstanding loans, but there's a lot of players who have it in private. So this is something we're working on. And I mean, the offering is quite simple. So within your Blockrise platform, you just deposit funds into the collateral wallet, which is still legally in your own name. So
Bitcoin.
Yeah. And there's some cool quirks to it. So you request the loan. So let's say if we start at 20,000 euros, you request a 20,000 euro loan. And then in the next step, you decide what your LTV, loan to value, should be. So the minimum, of course, is required, which is in our case currently 50%. But this is dynamic based on the market conditions. But currently 50%. So you need to deposit at least twice in euro value the collateral.
Yeah.
And then you can take the loan, and then in the last step, you get all the agreements, etc. And you actually sign for the agreement by making the on-chain deposit, and the signature of the transaction is used to sign for the agreement. Pretty cool.
Yeah.
But like we took this legal approach, and it works. And actually, we're now also implementing this in the client agreement, which is another story. Anyway, Bitcoin native.
Yes.
So that is the current proposition. And we do weekly disbursements, only 12 months, 8% fixed interest, 1.5% origination fee. This will all change and develop over time as I hope to. So we're of course we're in need of getting loans from investors, lenders, to finance the
capital. You need to raise capital to lend out.
Exactly. So we're approaching more traditional finance who are looking for 6% interest on their euros in batches of 12 months. And we issue those loans, or we call those loans to issue to the borrowers, the Bitcoiners on the other side. So this whole market dynamics, very interesting. It's new to us, credit risk, capital management, those kind of things, but super exciting as you can imagine. And now we're basically making it more flexible. So I think with the knowledge of today, we're just going to introduce a 1-month loan period and a 12-month, which we already have.
Okay.
Because the 1 month period, you can still have 3 months by having 3 times a 1 month loan. So you refinance it for 3 months, 6 months, whatever, and then 12 months, and you can refinance 12 months. So that will allow for enough flexibility on the platform. But the 1 month one is very interesting if you want to leverage for a short period of time. For example, our asset management. So we can change our asset management proposition by including a second strategy, which takes leverage in the downturn markets and builds up a euro position in the bull markets.
Yeah.
And this is a
You're
risk,
amplified.
exactly, with the same
volatility.
model.
Yeah.
So that is a bit of the development that we're going through. Also, I think very relevant is bank accounts.
Yeah.
So you can actually soon start, like, and this is assuming this implementation and Bitcoin backed loans for consumers. But if in the next few months, I would say this is the timeline we're talking about, you can actually live off the Bitcoin standard. Meaning you can hold Bitcoin in collateral, on-chain, verifiable. This is what we offer at Core. You can take a loan, and now the minimum is 20,000. We'll find ways to make it lower with proper capital management. We are able to do this. Like, nothing is limiting us from not doing so. Or opening a credit line, maybe linking that to a payments card or a bank account. And you can live off the Bitcoin standard by leveraging your Bitcoin position. Of course, you should be risk aware.
Yeah.
Low loan to value is always safer than a higher loan to value, but we can find ways to make this a very interesting proposition. And so with the bank account, this becomes such a cool proposition. So you don't, like current Bitcoin bank accounts, the implementation, what you see is you have Bitcoin in a sort of custodial environment, and then you sell Bitcoin at every transaction. This is most of the Bitcoin bank accounts that we see around in this market, which I think is a sort of bad practice, of course, because you're selling Bitcoin, which is not per se bad, but you're being ripped off by paying 3% transaction fees, which is something I disagree with. So I'm more on the team of, okay, let's leverage your Bitcoin position, take a loan against it, and use that to pay. And then also, like, so Lightning, I'm a big fan of it, but this is actually a way of getting Bitcoin adoption much higher because every merchant accepts credit cards or debit cards.
Yeah.
So you can actually pay with Bitcoin through a loan with a debit card that's accepted everywhere. And that's much easier than implementing Lightning with merchants.
Yeah.
So I hope for both. Don't
Yeah.
get me wrong, but this is the proposition that we're working on. It's live, it's cool, it's working, it's well received. Of course, that we can improve as always, but the next months it's gonna be very cool. And there's so many like yield products, like you can do so many things with it.
When you're telling me this, my mind spins, and I'm thinking about approaches that I don't know if you heard about buck dollar, but what if maybe you can offer a yield on the euros and buy in the back end stretch from strategy like the digital credit. This is the digital credit frontier. And this is also what Michael Saylor says, like this is the biggest idea. All the capital that people put in savings accounts, you don't have to offer all the 11% yield that Stretch is offering, but you have to get like a buffer, a euro buffer, or they're also issuing a stream. But I think it's even a better product, even a better service if you also offer yield on the euros that they hold on the bank account.
Don't worry.
Okay.
we have been working dearly on this.
All right.
So
Awesome.
this is already in the making.
All right.
And it's important to we have a lot of challenges at Blockrise because we want to do a Bitcoin native. So for example, exactly what you're saying is what we're working on. This is, I would say, the third asset management product.
Yeah.
So the current one, the leveraged one, and the third one is a yield product. And there's a fourth one, which is the Blockrise Treasury, which is a private company treasury, which I can elaborate on as well. But the yield, definitely. However, as we have to deal with traditional regulations, a fund structure, so, a centralized fund, they have specific regulations on providing interest or yield, where in a Bitcoin native way, this is quite complex. So because if I would like to offer this, of course, it will be on segregated client level. So imagine a separate yield wallet where you place your Bitcoin as collateral, and instead of taking a loan and getting payout where you have to pay back the loan, you would get yield.
Yeah.
This is exactly Stretch in a Bitcoin native way, I would say.
Yeah.
We can offer this from a technical perspective very easily. It's just how do we
Plot,
fit?
go.
No, yeah. No, I mean a little bit more sophisticated, but we're navigating through this, and yes, of course, this is what gets me going in the morning. You know, so a lot of potential. The infrastructure is there. It's just figuring the technicalities on this.
Yeah.
So that is on a individual manner. We can also do a closer to what Stretch is doing, offering through our private treasury. So we're setting up a Bitcoin treasury for Blockrise. So there's nothing public. No, don't expect anything publicly about this anytime soon. But we want to isolate the Bitcoin on the balance sheet in a separate firm, not under the regulated firm. And of course, Blockrise is super long Bitcoin, so we need to maintain this super long position in a Bitcoin treasury. And in this treasury, we can actually offer bonds that will do exactly what you just mentioned.
Yeah, but and with your own capital,
so with our own Bitcoin capital,
yeah,
which will be the collateral, and then issuing bonds to the traditional market. Exactly. So the people that want to have a Bitcoin bond with a 6, 7, 8% yield, they can buy our bonds, which we use to buy Bitcoin and guarantee or as far as we can with all the legal implications, guarantee the yield on the other end.
Yeah. So then you will be a Bitcoin treasury company with an operating side.
Exactly. Yeah. So in the far future, you can consider a publicly whatever. I don't think so. I'm just not
never say never.
No, but I'm not a fan of centralizing Bitcoin, and so I think that for our own good, because this Bitcoin treasury proposition for Blockrise is super interesting privately again, because we have free custody because it's our own custody environment. We have extreme low trading fees because we have Blockrise. We have a possibility to issue our own bonds, our own loans. So everything against cost price, which make it for our own a super interesting approach. We will dollar cost average our own profits into this Bitcoin treasury. So again, it's not for the public, it's for my own sake. But it has some unique angles that other Bitcoin treasuries don't have. So, and it's also towards, we're raising a seed round now. It's also like put your money where your mouth is kind of principle to our investors. So this is just part of the journey.
Yeah, that's awesome. So are there things that you really want to point out to the audience, what you think it's most important, maybe that we didn't talk about yet? What is like the biggest takeaway that you want to give the audience?
Well, so I would say there's two things. One, we went over a little bit, is like developers, we just need more power in this space. There's still so much to be done. So that's a simple one. I mean, and support the people that are working on it. Like check out 2140.dev. Cool stuff they're doing. Pay them a visit in the office in Amsterdam. Can highly encourage them. There's also like related to this Bitcoin related events. Of course, there's the big conferences, but for example, here in Rotterdam, every 2 months, so it's every month, there's the Bitcoin BitDevs meeting. Once in Amsterdam, once in Rotterdam. So every other month in Rotterdam. Come visit. It's actually this Thursday again. So, but otherwise, the next one. Bitcoin core devs coming together, talking about really hardcore Bitcoin things. So we need attendees, we need questions, we need discussion, which makes just Bitcoin better. That's the one thing. And two, which is just the core of what we've been working on, is custody. I mean, I'm not saying that we have the most perfect solution. I mean, custody is always complementary to each other. We just need a lot of solutions that make the adoption of Bitcoin easier, but still assure security. And this is such an underappreciated topic. Like, I think that the hardware wallets, I mean, they're crucial in the Bitcoin play, but they haven't really developed a lot over the last 10 years. So it's not that it became a lot easier to set up a multi-sig wallet. I mean, there's some solutions out there, but this really deserves a better place, I think, in the play of Bitcoin adoption, where I mean, without this, Bitcoin like ultimately will fail. I mean, if Bitcoin becomes a centralized asset because apparently that's the best way to custody Bitcoin, I think that it will fail. And this is quite harsh. And I'm super optimistic because I mean, we have a solution and I see other people working on it, but there needs to be a lot more because Bitcoin as a centralized asset, power and money, you know, it's an asset that has been appreciating a lot over the last 10 years. So that means, or it could mean that it will continue to do so, which means that a centralized place is just a honeypot either for hackers or for insider fraud. Or so we need to find ways to keep it decentralized and to improve the decentralization of Bitcoin, which all starts with custody. So I would say that's my main takeaway. You know, if you cannot verify your Bitcoin, if you cannot see it yourself, do you really have it? Consider your setup, those kind of things. Do your risk diversification, etc. And that way we can keep improving Bitcoin.
Yeah, I've spent 3 to 4 years on the self-custody side, so I only can say amen to that. Thank you, Jos. Where can people find you on the internet?
So of course, X, LinkedIn, Instagram, even on the Blockrise under my name, Jos Lazet. You'll see a lot of content coming soon. So very excited to work on that.
All right, thank you, and thank you for having me.
Yeah, of course. Thank you for visiting in the warm and welcome Rotterdam.
Yes. All right, thank you.